Fidelity China Special Situations invests in listed equities that have the majority of their revenues coming from China. We also invest in private companies. Generally, we're looking at a 2 to 3 year window for these companies to come to market. We do also invest in some short positions, although traditionally this has not been a very big part of the portfolio. The investment process is very bottom-up, focused on the individual companies. There are a number of factors that we try to get our head around in any investment decision. One is thinking about growth or scale, which really comes down to thinking about how big a business could be in 5, 10, 15 years, given the way the company is positioned and the opportunity ahead of them. And then secondly, thinking about the quality of the business, so really thinking about incremental returns on capital. And a key part of the analysis there is thinking about competitive advantage and how sustainable that is. The third factor is management. Again, thinking about the management's ability to formulate a strategy and execute on that potential. Ideally, those factors are not reflected in the share price. So valuation is obviously a key factor there as well. We spread the net quite wide. Obviously, liquidity is less of a concern as a closed-end vehicle. So we're quite happy to go down the market cap curve. We find that generally smaller companies are less well covered, and with less information comes more mispricing. I think the biggest risk that investors should be aware of is the volatility of investing in a single country fund, and in this case, China is obviously very volatile, given that sentiment can swing pretty significantly. ESG is really a core part of the investment process. All Fidelity analysts have ESG ratings in addition to their fundamental ratings, and we do actively engage with companies where we see room for improvement on the ESG front. We do actively use gearing. We find that is important in a market that is volatile, like China. The limits are 130 gross, and we also try to keep it within 120 net market exposure. In terms of the discount control mechanism, we try to maintain the discount within single digits, and the board is active in the market to try to achieve those levels. We think it's natural for China to form part of a wider portfolio. We're talking about the second biggest economy in the world that's changing rapidly. There's a lot of investment opportunities. And we think the trust gives investors the widest possible exposure to the opportunities in China. We've talked about the public listed equities, but also the private opportunities that we're accessing as well.